Hello and welcome back. You're watching ET Now. This is Siddharth Bhamre with my co-anchors Nayanthara Rai from Delhi studio and Mubina Kapasi sitting besides me. Amit Jeswani, CIO Stallion Assets joins now. Hi Amit. Markets, there has been a lot of noise pertaining to, in last 1 year, we have seen a lot of noise, whether it's demonetization, whether it's implementation of GST, geopolitical issues, some state elections which have been closely fought. But this market is not giving up and climbing all walls of worry. A lot of participants have also spoken of that they are not comfortable with valuations. What is your take on this market and how you envisage market going forward?
Thank you, Siddharth. A pleasure always speaking to you. The first thing is that market's going to move in cycles, right? The first cycle was high growth, high quality. Now, every bull market is the same. It starts with high growth, high quality. It then comes to high growth, lower on quality. And the third phase is just no growth, no quality. We're now in the second stage of the cycle. So high growth and low quality will outperform everything else. So that's where we believe that we are put. And the sectors that we are very bullish on are infrastructure, financials, and steel cycle. That's the cycle we've started playing right now.
Okay, you just spoke about steel, so if I could get more specific on that. Amit, this is Nayanthara. What is it about steel that you like? Is it because a lot of steel assets are on the block and you're going to see the bigger guys make a play for it? What is it about steel that you like?
See, the thing is that we've seen paper cycle going higher in 2015. We've seen the sugar cycle creating a lot of wealth for investors. Now, there are patterns which are the same, right? So the paper cycle started with promoter buying. The chemical cycle started with promoter buying, and these stocks went up 10-20x. Now, out of the top 10 steel companies, 6 steel companies the promoters have been buying, right? The number of retail investors, let's say a Tata Steel, the stock price of Tata Steel has gone up 3.5 times. Retail investors have increased, but if you see the number of retail investors in Tata Steel, JSW Steel, they're all down 30%. Now, there's going to be accelerated earnings growth for the next few quarters in the steel cycle. The new capex which is happening in this steel cycle is down by 60% if you take any 3-4 year period. So that's where big money would be created. So promoters are buying, retail shareholders are coming down, the steel prices are going higher. That's where we have just started buying actually the steel play on our commodity, on our momentum portfolio.
Sharp spike, a small spike, but nevertheless, a spike coming by, and all those steel prices you just saw, SAIL, JSW Steel, all of them actually just spiking up by a tad bit. Amit, you also spoke about infrastructure, those as well. That's one pocket which you are optimistic on. Now, yes, government's going to ease up on fiscal spending. It is going to, there's the Bharatmala project. Are those the triggers that you are watching out for when it comes to infra? Because it has been an underperformer, infra spending really hasn't come by in the last 1 or 2 years.
So we have actually gone on high quality there. So the way this will also work is infrastructure stocks will keep moving higher if market believes that they can execute on time. So as soon as orders will come, companies like DBL, right, Dilip Buildcon, they have a great execution record, and markets are a discounting machine. So as soon as Dilip Buildcon bids and wins a new order, markets will start like discounting that what 2021, 2020, they will finish the orders. On the other side, you have companies like HCC and all those guys who will also win orders, but as soon as they win orders, markets will not discount 2021 or 2022 for them because their execution track record has been very bad. So till 2019, the trade is be in the high quality infrastructure companies who can execute on time. After 2019, we will probably go down the quality curve and say that the lower quality companies, as soon as they start executing, and if they are executing on time, we'll buy the lower quality ones. But till FY19, for the next 1 year, you have to be there on the infrastructure space. That's where, on high quality infrastructure companies, so not the lower ones, but high quality infrastructure companies, road construction companies can create 50-100% returns easily in the next 1 year.
Well, that's what, most of the spending is coming from government, Amit, infrastructure space. Now, you spoke about what you like, steel and infra, but then, I want to talk about defensive spaces like pharma and IT. Now, pharma has been going through a really bad patch, but if you look at last 4-5 months, at least from the price point of view and the news flow point of view, sector seems to be stabilized. Some people are still comfortable with, the valuation, and some are still saying that it's quite expensive. What's your take on pharma and IT? Last 5 months, though, market has slowly, steadily moved higher, IT index and IT stocks have managed to outperform despite all the concerns related to the news flow which is emanating from US markets. What's your take on these defensive space, and do they find some space in your portfolio?
So we have 0% exposure to pharma right now. Pharma was 45% of our portfolio till 2015. So that's how big we were long pharma. Infrastructure right now is 30% of our portfolio. So we bet few, but we bet big. The pharma cycle, see, the thing is that the price correction in pharma is now over. If you see in the pharma as well, you've got Lupin promoter buying, you've got Glenmark promoter who's buying from the market. And these are very strong indications for what's going to happen in the future. So the large percentage of price correction, because they're already down 40-50%. So the large percentage of price correction is now over in the pharma cycle. But will you make money in the pharma? I don't think so, not for the next 1 year. You will miss out the whole bull market. See, pharma was the leader of the previous bull market. History has told us that leaders of the previous bull market never worked well during the next bull market. And the pharma index went from 2000 to 14,000 between 2009 to 2014 without even correcting once more than 11%, right? Trends are very strong, and that was a pharma trend. But right now, you will not lose money from here onwards, but you will miss out this bull market. This bull market, at every level they'll be selling. I'll just give you a brief about Lupin. The number of shareholders in Lupin was 70,000 in 2015. They have increased to 2.5 lakh shareholders. So retail has bought into the pharma fall. At every higher price, you'll get a lot of selling. So we need large trends and large growth numbers, and that's not going to come in pharma for the next 1-2 years.
Okay, Amit, we're going to leave it at that. Thanks so much for joining us with those trading ideas. So steel and infrastructure is what Amit is betting on. If you look at today's trading session,